Have you ever thought about measuring the price of Bitcoin in gold rather than in fiat currency like Australian dollars or US dollars or the euro? It kind of makes a lot of sense when you think about it. I mean, gold has been around for thousands of years as a reliable store of value. Its price is dictated by the free market based on supply and demand. And we have confidence in it. We have faith in it as a long-term store of value. Whereas these fiat currencies, as inflation increases, as debt increases around the world, kind of makes sense to value a sovereign sound free money in terms of another sovereign sound money. So in this video, we're going to talk about what can you actually do if you want to measure the value of your Bitcoin in gold rather than dollars, a little bit of information behind that, and some of the history around gold and its attachment to fiat currencies as well. So stick around, guys, and let's get into the video. Now, firstly, guys, I just want to start this video by saying my journey into economic history, into learning about Austrian economics. I guess my research and general understanding is still pretty new. So I've been learning about finance, I've been learning about investment, I've been learning about markets for a couple of years now, but really getting into gold and economic history and Austrian economics and the schools of thought like Keynesian economics in Chicago, and finding the right people to learn from. Some of the people I've just only briefly been looking into are like Murray Rothbard and some others. Obviously Trace Mayer, I listen to a lot of Trace Mayer. He's pointed me into some fantastic resources. So my journey into gold is pretty new, but it's so intriguing learning about it, because the more you learn about gold and the role it's played in history, the role it's played with economies, and how these economies have fared when they've been on a gold standard, when their fiat currencies have been backed and convertible to gold, is so fascinating. And it gives you like this incredible insight into Bitcoin, because Bitcoin just shares so much similarities in terms of its economics with gold, but it's like gold on steroids. That's the most simple way I can put it. So I like, when I learn about these topics, I research them and I like to talk about them. So the reason this came about today was based on some podcasts and some things I've been listening to lately that just brought up gold as using gold as a means to value. So when we think about fiat currencies, when we think about Australian dollars or euros or American dollars, these currencies are centrally controlled. They're controlled by governments based on Keynesian economic policy. So with that, we get things like inflation. We get government printing of money to fund, wars, to fund various things. And we as a people have no control. We have no control over the value, over the long-term depreciation of these currencies due to inflation. So over the last, I did a video recently on France and the euro, and showed the devaluation of the euro just over a 20-year period. Something like, I think it was around 34%. So long-term savings, pension funds, self-managed super funds, well, not self-managed super funds, sorry, super funds for that matter, anything that has a lot of assets stored in cash, or, I would even argue derivatives as well. I think we don't have a lot of control over those. We don't have anything that's tied to the value of a dollar. And we can go even further, which I won't in this video because I'll end up just dribbling on for ages. We can even go into further in terms of how foreign currencies are held by states around the world. So the US dollar is a global reserve currency. So in the event of a US dollar collapse, it would be essentially a global catastrophe, because the US dollar is used for international settlement. It is the main reserve currency, and a lot of states, a lot of foreign governments hold US dollars in reserves, and so it would just be awful. So anyway, this got me on this journey about pegging the price of Bitcoin to gold as a more reliable means of valuing my Bitcoin holdings. So what you're looking at in front of you is the Bitcoin to gold live price chart by these guys, Crypto Compare. So what this is doing is this is telling us the value of Bitcoin in terms of gold. So you can see at the moment, the current price here, we've got, and this is in grams, by the way. So at the moment, one Bitcoin closed at buying around 86 grams of gold. So it's really hard for us to, because we're so used to valuing things in terms of dollars for us here in Australia, obviously the Australian dollar, it's hard to kind of wrap your head around, but it's, I just think that as a long-term reliable way of measuring value, this is something that I'm going to stick with, or at least compare to measuring in US dollars. Now, just to get into just a little bit of history, I mean, I've spent hours on this already. I've spent too long researching this stuff. We know that President Nixon, he ended the convertibility to gold in the 70s. But before that, even though notes were redeemable for gold, banks were still practicing fractional reserve lending or fractional reserve banking, where they were lending out more notes than what they actually had in reserves. So all Nixon did really in the 1970s and 1971 is he stopped people being able to redeem their Federal Reserve notes for gold, thus entering the era of full fiat currency, meaning that fiat currency is backed by government saying that it has value, and that is it. You also have no effect over the value of that currency. That's completely dictated by the Reserve Bank. Not even the government has control over what the Reserve Bank does, just an FYI. So that happened in the 1970s in the United States. Now, many other countries followed suit along different periods. Now, quite a while ago, I looked right into the Australian dollar, and I had a bunch of amazing resources about exactly when we detached from the gold standard, because Australia had a gold standard as well. We were actually a signatory on the Bretton Woods Agreement that was put together in the 1930s in the United States, that kind of formed the gold standard. And what that is, they kind of controlled the price of gold. So the paper convertible notes wouldn't change in value, and that was used as gold was used as international settlement. So the money changed hands, with gold was used as international settlement. So for the Australian dollar, I wanted to know exactly when we detached from the gold standard, and for some reason, surprisingly now, I'm finding it extremely hard to find that exact information. Search for a good couple of hours, and I'm really struggling to find it. If any of you know, please let me know where I can find it. But when I think it happened, based on my previous research, is in 1931 under this, which is the Commonwealth Bank Act of 1932. This was an act to amend the Commonwealth Bank Act of 1911 to 1931. Now, I could be wrong, but I just remembered from my previous research that this is actually when it happened. All the other details around the Australian dollar, its convertibility to gold, its merging to complete fiat is vague and is grey and is difficult to find. But I will do an entire video on the Australian dollar, on its pegging to commodity-based assets like gold and silver, and its history in a future couple of videos, because this is a really in-depth topic and I could just go on for hours rambling, and I value your time, so I'm not going to do that here. So here's some other charts I just kind of want to show you that I've been looking at that reinforce or provide me the information, the additional information I need for me to lose trust in at least the US dollar and its future, and to reinforce pegging the price of Bitcoin and gold. So this is the United States Consumer Price Index, that is in the blue line. That line represents how expensive goods are becoming for the average American. So the index looks at a bunch of things like food, like utilities, like rent, different things, and over time works out where they're kind of sitting in terms of the value, the underlying value of money, right? So when the index goes up, things become more expensive. I've just put another graph on top of here to compare, which is the US wages and salaries growth. So this is over 5 years, and we can see that since around kind of mid-2017, US wages and salaries growth have gone sideways and down. So the index is going up, so things are becoming more expensive, but salaries and growth are not going with it. They're not correlated to that line. Therefore, it's becoming more and more expensive for the average American day to day. Now, when you hear people talk about certain salary agreements or certain prices of goods, or maybe major government contracts being pegged to CPI. The thing about CPI is you can't control it. So the rate at which CPI comes out is centralized. So the people can't hedge their risk in terms of what decisions they can make with their money based on a reliable forecast of what the CPI will be. Therefore, essentially, you're always at a loss because you don't know what's going to happen. You can't hedge your risk against that volatility. Now, here's another interesting one. This is the CPI again, but against US government debt. So you can see just how closely correlated the consumer price index is to US government debt. Now, US government debt is growing and growing. I believe it's up near 29 trillion, I think it was last time I checked. No one's really talking about it. It just keeps ballooning. Just about every country in the world is increasing its debt year on year. I know France is in, as we covered in the recent video on the French bank run, France's debt to GDP ratio is 101%. So they are now in more debt than their entire gross domestic product. Not a good thing. I think Australia's was around 44%. So this is just a good indicator of, like, things aren't getting better. Things aren't getting more positive. You know, the fiat system, centralized printing of money and inflation, and the Keynesian school of thought, which is behind all of this, I really... Look, things are not looking good. Things are not looking good. But anyway, I digress. So for a good comparison, I know Venezuela is a fringe case. We've said that before, but I think it's worth studying just to show how bad things can get, right? Think how bad things can get. So this is Venezuela's consumer price index over the past 10 years, and you can see it's essentially an exponential increase. Really, really bad stuff. And this is Venezuela's inflation rate. So you can see here from about 2017 to 2018, you can see it had a slight rise, and then it's just gone just about vertical. So really, really terrible stuff. Actually, the people over there, the economy is in severe trouble. But this is just kind of showing you to reinforce why valuing a particular asset in terms of dollars may not make look. It may be more reliable to value it in something like a commodity-based asset like gold or silver, or do both. That's what I'm going to do. I'm going to measure things in gold and US dollars, but I'm slowly going to try and change my mindset more and more to valuing things in gold rather than dollars. So here we have the Bitcoin Volatility Index, 30-day, so BTC USD against the 30-day gold USD volatility. So what I just find is interesting is, you know, how volatile Bitcoin was against the US dollar. Now, of course, Bitcoin is quite a volatile asset, but when we look at it actually over time, the volatility of Bitcoin has been reducing. It has been reducing over time. But one thing we have to remember when we're looking at Bitcoin volatility is it is against the US dollar. So the US dollar, the volatility of the US dollar is included in that graph as well. When we look at the 30-day gold to USD volatility, just look at how low the volatility is there. I mean, it's quite incredible, the difference. So here we are just on TradingView looking at the Bitcoin dollar on Bitfinex. Bitfinex has the highest trading volume on US dollars, so that's probably the most reliable data we have at the moment. And below here, we just have the standard deviation. So, you know, it's interesting to look at Bitcoin versus dollar. And when we look at the Australian dollar and US dollar, we can just see just how volatile that was. Now, again, these aren't, you know, I'm not saying these are the only measurements you should use. I'm just kind of giving you some indicators, some information that I have looked at and researched that kind of supports looking at Bitcoin and gold, or at least adding that to your charts. So interestingly, this is the price of gold pretty much over the past 100 years. So we can see, I believe this period here, you actually see this should be up till around about 1971. This is the price. This is where gold was kept at a certain value following the Bretton Woods Agreement. I need to do some more research on this. But following the Bretton Woods Agreement, the price of gold was fixed to this price here to ensure that the spending power of the notes issued against the gold backing remained the same. And then when it was detached, the price of gold could then be dictated by the free market. The free market could say, hey, we think gold is this much, supply and demand economics. When the price of gold goes up, you'll have production ramp up as well. So you will have a balancing there, but the free market then decides the price of gold. We can see just a massive rise over the ensuing decades. But when you look at really just the past few years, gold has actually been quite stable in terms of its overall value. Okay, it's not actually letting me zoom in there. Why don't I just go over the past 5 years? Yeah, no, it's still quite volatile. So But it has been, it's just the resolution. The resolution of this graph is what makes it look volatile. It's not volatile. It's actually been trading in quite a close range. You can see here it's been hitting peaks of 1357 and 1061. So this was just a really good article I found that I just included here for some more information for you. Volatility points to parity between gold Bitcoin by Bloomberg Intelligence. This was a really good read. And this is another one as well, just a little bit of information on the consumer price index. I just wanted to read up on it a little bit more to make sure I had a full understanding of it before I actually did this video. So guys, that is it. That is my kind of basic thesis on my entry point into starting to value assets in gold. You know, I have so much more research on this. I just find it, learning about economic history has got to be one of the most fascinating areas I've looked into, and I got some massive amounts of material to read. I just downloaded an audiobook by an Austrian economist called Murray Rothbard, and the audiobook is 45 hours long. Whew. So I'm probably going to have to listen to that one on 1.75 or 2 times speed, and that's still going to take me quite a while to get on. But I'm going to do a video soon, guys, to show you all the resources on who is kind of teaching me, who are the people I'm following, who I'm learning from, and kind of to give you an idea on like my journey and how where it's gone, you know, from starting into investing and then into crypto, and now really getting into economic history. It's really fascinating stuff. So anyway, guys, that's it for the video. I hope you liked. If you did, those likes, smash them. I really do appreciate it. If you haven't subscribed, make sure to come on board. Let me know what you think in the comments. Do you think this is all crap? Do you think it's stupid to be valuing Bitcoin and gold? I'd love to hear your thoughts and your opinions. And yeah, that's it, guys. Have a great day, and I'll catch you in the next one. Cheers.